Has a period of market volatility ever made you wonder if your investment platform can actually handle the heat? It's easy to feel confident when the market is cruising, but when the VIX spikes and everyone rushes to trade, the real question emerges: can the M1 platform truly be stress tested? And what happens when the unexpected volatility hits? We're diving into the engineering and design choices that make M1 a resilient player, even when the markets get shaky. The stress test scenario. When we talk about a platform's stress test in volatility, we're really asking about three things: stability, liquidity, and execution. Think back to the most volatile periods: massive selling, huge trading volume, and sudden price swings. For a brokerage, this is the ultimate test. The system needs to stay up, process the sheer volume of orders, and find the necessary buyers or sellers to execute trades. M1's unique structure is designed specifically to weather these storms by promoting a long-term, disciplined approach over frantic, reactive trading. M1's design in action. The key to M1 stability lies in two core features: trading windows and fractional shares. The trading window advantage. Unlike platforms that allow minute-to-minute trading, M1 uses specific trading windows, one in the morning and a second in the afternoon for certain account holders. Now, why is this an advantage during high volatility? It prevents the platform from being overwhelmed by a constant, chaotic flood of individual, high-frequency orders. By batching trades, M1 can execute them more efficiently and systematically, reducing the strain on its infrastructure and ensuring better overall execution quality for the collective user base. It essentially adds a layer of controlled, cool-headed processing to an otherwise frantic market environment. Fractional shares and liquidity. Market volatility often means certain high-priced stocks see huge sell-offs. For platforms that only deal in whole shares, finding a buyer for exactly 100 shares of a $2,000 stock can become difficult in a panic. M1's use of fractional shares solves a critical liquidity problem. Because you are buying or selling percentages of a stock, M1 can combine small orders from multiple users to make up a large, whole share block. This means your trade has a much higher probability of being filled quickly and at a fair price, even when everyone else is trying to get out at the same time. This feature is a powerful de-risker during periods of high trading volume. Automation over emotion. Beyond the mechanics, M1 is stress-tested by design through its emphasis on automation. Features like auto-invest and dynamic rebalancing are set-it-and-forget-it tools. In a volatile market, human psychology often pushes us to panic sell at the worst time. M1's automation steps in, removing that emotional trigger. Your money is automatically allocated to maintain your target portfolio allocations, meaning you're often buying shares when prices are low, a foundational principle of long-term investing. In a true stress test, the best defense isn't just a stronger server, it's a platform that systematically discourages the emotional trading that breaks systems in the first place. M1's platform is built to handle the technical load and to guard you from your own short-term impulses. With that said, thanks for watching, and until next time.